people say, well, what's the one pattern? I think it would probably be Landry-like pullbacks. Hello, everyone. Dave Landry here from DaveLandry.com. This is Trading Simplified. So what do we talk about? Well, I want to spend some time catching you up on the methodology and action. Not so much new action, and you'll notice that lately we haven't had a whole lot of mystery charts. And that's because there really hasn't been a whole lot of meaningful setups. And that's one of the reoccurring lessons I talk about quite a bit is patience. Now, along the lines of patience, you do have to follow your plan on your existing positions. You need to see each position to its fruition. Now, I want to talk briefly on where we are with the TFM 10% system. It actually still looks pretty good in spite of the market weakness that we've been seeing as of late. I'm also going to follow up on the wisdom of Jesse Livermore. I think we're on part 13. Once we're finished with the series, we'll put them all together and organize them a little bit better than we have. But if you do watch these shows in chronological order, you'll get each one in order. So look for that playlist on StockCharts YouTube site. Housekeeping, I do take requests. You can send them to DaveLandry.com/contact. My Twitter is at @TFollowMore, or X as they now call it. YouTube is at Dave Landry. Most weeks, or most Thursdays I should say, I do a webinar. If you go to DaveLandry.com/webinar, you can join me live, bring your questions, and if you want to submit anything ahead of time, feel free to do that too. If you want the slides from this presentation and all the other presentations combined, you can send those to DaveLandry.com/StockCharts. All right, let's talk about the mystery charts and the methodology in action. As I said a second ago, no mystery charts this week, and it might be a little while before we see mystery charts again. It's been several weeks since we had any setups trigger. I think August 24th was the last time we had a setup, and I don't know if that one triggered or not. Anyway, you can see we had a fairly deep pullback in KNF. This is the first deep retracement in IPO. It's one of my favorite IPO patterns. In fact, all my IPO patterns are my favorite. Probably the best one, or the one I like the most, would be the buy at B. And we talk about that quite often. So see the playlist here and on my YouTube channel at Dave Landry. Entry was here, stop was down here, initial profit target was up here. And you can see it took a while for it to trigger, and after it did trigger, it came right back in. So one has to ask, has this position already turned into dead money? Well, fortunately, a few days later, it took off again, but then it pulls back. And then once again, you're probably wondering, geez, is this dead money? Should we just bail out? Well, knock on wood, after some zigs and zags, it did come back. And as of a little while ago, now conditions are kind of deteriorating as I'm giving this presentation, but as of a little while ago, it was hitting all-time highs. So it's not dead money yet, or not dead yet money, as the Python boys would say. I'm not dead yet. I watched a little bit of that the other night, the Holy Grail. It's pretty good stuff. Anyway, we were down $740 fairly quickly. That's based on a 100K account. And then, fortunately, it did take off. It hit that IPT. And then it's drawn down from that, as you can see. And we were only up $12.42. Now, remember, at the IPT initial profit target, let's say you're risking 5 points, which we were in this particular case, or actually slightly more. I think it was 6.7 points. You take profits when you're up 6.7 points, and then half of the profits, and that is a 2% gain overall. So on a 100K account, that'd be a $2,000 gain. You take half of that, so you pocket $1,000. But you can see it did draw down from there. So that 1,000 plus 242 open, that's a $758 drawdown. Now it rallied back up, and then you're at a new equity high of 1,000 of the closed profits plus 1,000 plus 1,179 open profits brings you back to 2,179. And then, of course, it drew down again, and that's an $816 drawdown, and now we're back to about where we were, so right around $2,200 on the position. Now, the ultimate goal in all of this is to capture a long trend. Now, I'm slotted as a swing trader, but I will hold on to positions as long as they move in my favor. If you look at some of the older presentations, you'll see where we did have a stock every now and then that will hold on for over a year, and I think one of them went over 2 years, and that's an exception, not the norm, but that's why we are playing this game. And the way we play it is we keep the stops fairly tight to begin with, and then over time we gradually loosen them up after the initial profit target is hit, although in more recent times I'm slightly more lenient on the first low for the first half of the trade. And we've talked about that before. Anyway, here are my trades down here. I used a little discretion. I didn't do quite as well as this shows here. This is based on the hypothetical account. This is based on a real account, or what I like to call my model account. This is where I grab the trades from for these presentations. I do take the trades that I recommend. Anyway, you could see, so I made a little bit less, but the real money is in the second low. So should this thing continue to rally, then we're along for the ride, and that's where the real money is. The other position, or the second position we have, is LFMD. This was a nice Landry-like pullback. I often say all you need is one pattern to be successful, and I'm borrowing that from Linda Rasky, and people say, well, what's the one pattern? I think it would probably be Landry-like pullbacks. You see the Landry-like down here. We had plenty of days of Landry-like, 40-something days, and then it pulls back, goes to zero, okay? And nice little pullback, and you look to enter if and only if the trend begins to resume. We got a trigger, but what immediately happened? We're down $1,080. The market took off. Stock took off, I should say. We're up $880. And then, of course, it implodes right back down. And now we're down $1,280. If you look at the whole swing, which I recommend you don't, but that's a $2,160 drawdown. And then now, or at least as of a few minutes ago, we're hitting new highs, new equity highs. We're up $1,264. When we do hit this IPT, I just said when, but hopefully that'll happen. I know you shouldn't use the word hope, but you got to be positive. I was going to be negative, but I figured it wouldn't work out. That's Mr. Wright, I believe, with a W. But anyway, we're not too far away from that IPT, initial profit target. I'd be pretty happy if we hit that. Now, the other position we have is a short, and the old Wall Street adage, all shorts go against you, sure does seem to be true. But you can see initially we were doing okay on the position, and then it began to retrace. So we were up like 552 within a few hours of being in the position, and then it retraced back up to a loss of minus 1680. Now, if it hits a stop, obviously you lock in that loss, and it'd be a 2% loss on the account. And here's the tough part. That's a $2,200 plus swing. But you have to make a plan and be willing to live with that plan. If you can't live with the plan, then A, trade smaller, and B, or maybe B should be A, but B, pick better stocks to begin with. Make sure you're more comfortable with your stocks going into the position. If you'd like to take a look at the archives on this, you can go to davelandry.com/archives. I'll update them so they'll be a little bit newer than they are here. And what I started doing in more recent times, about a week or so ago, I started uploading them to YouTube. So if you go to @DaveLandry, you could take a look at the delayed services. And it's a pretty good exercise, if I say so myself. You get to see the methodology in action, warts and all. Now, I want to update you quickly on performance-based metrics. The way I see technical analysis, it's not some mumbo-jumbo and all this complex and arcane stuff and esoteric. I just look at the markets and see where they are and see where they were and figure out if they're doing well or if they're not doing so well. So one of the simplest performance-based metrics you can use is the percent from the 50-week closing high. So the 50-week closing high was initially way back here, and then we have these zones below, which I'll explain to you what they are. This is 5% off of that 50-week closing high, which would be right there now. And this is 10% off that 50-week closing high. The 50-week closing high is the top of the green line. And you can see as this bear market wore on a little bit, eventually it begins to catch up with price. Now, as a general statement, if you're within 5% of the 50-week closing high, that is a good thing, and the market's in pretty good condition. If you are more than 5% away, then you might want to pull in your horns a little bit. Be cautious. Make sure you're honoring your stop. Make sure you're becoming selective in new setups. And then once you drop below 10%, you need to think about getting out of the overall market. And the whole system in and of itself is just a close below the 50 simple moving average and a close below the 10% line, or 10% away from the 50-week moving average. So the last sell was here. That actually was another sell right there in the system. Now, to get back in, you need two lows like we had back here above the 50-week moving average and above this 10% line. And I'm currently long the Qs, although it's been kind of painful. I think I was up 60 or maybe even 70 points on them, and then having to watch that draw down a little bit. So that's going to be hard to watch that as a mechanical type of system. Most of the trading I do, or 99% of the trading I do, is purely on a discretionary basis. But anyway, the 50-week closing high now is the high we hit a few weeks ago back in July, and obviously we've drawn down since then. But longer term, the market still looks okay. Shorter term, I think there are a lot of issues. Your big names like Meta and Apple have begun to break down. A lot of sectors have begun to break down. So it's looking a little bit uglier on a daily basis, but on a weekly basis, it's still doing okay. So that sort of helps you to see the forest for the trees. Now, getting back to the series on Jesse Livermore, as I've been saying each week, I'm pulling mostly from Reminiscence, or currently pulling from Reminiscence, and that's probably where the crux of the presentations will come from. I will get some color commentary from the biography by Smitten, which I do recommend you read, and also How to Trade in Stocks, which has some updates from Mr. Smitten and some comments, which are okay, but I wasn't really blown away by the commentary there. But the book that he wrote on the biography, or his biography on him, was really, really good. I recommend you do read that, of course, after you read Reminiscence. And by the way, you should read Reminiscence of a Stock Operator once a year. Now, we last left off, Livermore had blown up yet again. And that's the thing that I'm really learning by rereading all this and going into it a lot of details. That Livermore, as great as he was, as famous as he was, and as much money as he made, and he had these huge yachts and all this other stuff, he made a lot of mistakes, and he was not immune to human weakness, and we'll get into that. We'll talk about that in just one second. But he definitely would over-leverage to ridiculous amounts, and that was part of his downfall. But he also made some mistakes outside of that, and we'll talk about that in just a few minutes. So he went to Chicago, and he said he was sick, nervous, upset, and unable to reason calmly. That is, I was in the frame of mind in which no speculator should be when he is trading. So you really have to be careful of extraneous influences. If you're not feeling well, if you're tired, or if there are other extraneous influences that have nothing to do with the market. And a few weeks back, I gave the example of, let's say you have a little tiff with your wife, and you kind of feel like, well, I'll show her, and then you go into your office, and then you do some stupid stuff, and then you're like, she'll never know. Now, I would never do these things, but I'm just showing them to you just in case you ever thought about doing such things. I had learned a great deal about the game of stock speculation, but I had not learned quite so much about the play of human weakness. And that's just another way of saying trading psychology. So Livermore was troubled by the same psychological influences that all us mere mortals are troubled by. Money losses have never worried me in the slightest. So he was okay with taking losses, and he didn't really get upset about those drawdowns. And that's sort of what I showed you earlier. Like, look, it draws down $2,000. So what? Well, guess what? I'm over here dropping F-bombs, and I'm getting pretty pissed off. But longer term, I know that losses come with the trend. And that's what Mr. Livermore is trying to say, that losses just come with the territory. But other troubles could and did. I studied my disaster in detail and, of course, found no difficulty in seeing just where I had been silly. I spotted the exact time and place. A man must know himself thoroughly if he is going to make a good job out of trading in the speculative markets. Well, it sounds like Sun Tzu, and I saw a while back where you middle-aged guys and you stop quoting Sun Tzu, but it's kind of hard sometimes. It does dovetail nicely into the market, and I would recommend you read The Art of War by Sun Tzu. Also read The War of Art, which is a little bit of a play on that. It's a book about, spoiler alert, about resistance and how many things you must overcome in life. Anyway, if you know the enemy and you know yourself, you need not fear the result of 100 battles. If you know yourself but not the enemy, for every victory gained, you will also suffer defeat. If you do not know neither the enemy nor yourself, you will succumb in every battle. So understand a trading methodology, understand how you're going to react to that methodology, live through that methodology through good times and bad and indifferent too, and see what psychological influences that has on you. Get to know yourself. A great many smashes by brilliant men can be traced directly to the swelled head, an expensive lesson everywhere to everybody, but particularly to a Wall Street speculator. So he was talking about how when you're doing well, it kind of goes to your head, and believe me, I have that problem quite often. My wife will often tell me when I'm excited about whatever and wanting to buy a bunch of stuff, and she's like, Dave, we've been here before. It's like there's a lot of ups and downs, and you're on a high, there's going to be a drawdown, and usually there is shortly thereafter. And I've seen a lot of mistakes being made by a lot of people over the years. I've seen one couple quit a very successful business because trading was so easy. I know you're probably laughing if you've been trading for more than a day, and I've seen other people do a lot of stupid things when it comes to trading. And just I can go on and on, but one particular example is just kind of popping in my head right now. I knew someone that did exceptionally well, amazingly well, and I was begging him to pay off his condo, and if he was that good, trade with a little bit of the money, keep 100K out, and then parlay that money again. And unfortunately, he blew it all up. And I have a friend locally, well, he's no longer with us, but that's another story. And he suffered a similar fate. He ran about 5,000, which I later found was of questionable origin, into about $1 million or so. I saw one statement that was like 985, if memory serves. And then he blew up and he ended up homeless, and he actually lived with me for a while after that. A lot of stories there, 2-drink minimum on those. But I told him once, hey, if you're that great, why don't you put that money into an annuity? And back then interest rates were higher than they are now, and you could collect a decent salary. And back then $1 million was still $1 million. And he says, well, I'm not going to take advice from you. It's like, okay, well. Anyway, I digress. Imagine that, me getting off topic. Okay, so he was in Chicago, and he gets called back to New York. Somebody had an offer that he couldn't refuse, so to speak. He said he was sick, nervous, upset, and unable to reason calmly. That is, I was in the frame of mind in which no speculator should be when he is trading. Amen. You need to take care of yourself. You need to get plenty of rest. You need to work out. And I'm a firm believer in these things. Probably don't get enough rest, but I do, and I have religiously worked out for a couple years. I used to make a lot of jokes about lack of exercise, but I'm actually pretty good at it. And they actually call me Old Faithful in the gym because I'm there every day. Little do they know what it takes me to get to the gym. It's not like I pop out of bed and run there. It takes a lot to get me there. But anyway, he was staked by a guy named Dan Williamson. Now, these names are fictitious, including Livermore's name. He goes by Larry in the book. But anyway, this Williamson guy just seemed like far too generous. Seemed like a deal too good to be true. He gave him $25K to trade, and Livermore's like, well, if I blow that up, what happens? He says, well, we'll give you some more. And he turned that fairly quickly, 25K into 112K. The conditions were fantastic. And then the conditions began to sour a little bit, but he saw the short side coming up, and he began to pounce on it. But anyway, he was making around 150% a week, and he tried to pay back Mr. Williamson and get out from under him, so to speak. But Mr. Williamson would not take his money. Well, Mr. Williamson had a hidden agenda, and we'll get to that in just one second. So he began to see the market weaken, as I just said, and he established a short position in Chesapeake and Atlantic Railroad. And then he quickly found out that the trade was canceled. So Williamson said, Larry, don't do anything in Chesapeake and Atlantic just now. That was a bad play of yours, selling 8,000 short. I covered it for you this morning in London and went long. Had he kept a short position, he would have done exceptionally well. So this was a quick lesson to Livermore. Livermore would later find out that Williamson was liquidating his brother-in-law's estate, and he wanted Jesse Livermore to trade at his firm to make it look like the selling was coming from Livermore on these trades while he was liquidating his brother-in-law's estate. He didn't want to tank the market because there was so much money there. So basically, Livermore was a bit of a patsy for him. To subordinate my judgment to his desires was the undoing on me. So he was handicapped and couldn't trade in a proper manner, and through the process he ended up owing the firm $150,000. The loss of the money didn't bother me. Whenever I've lost money in the stock market, I've always considered that I've learned something. That if I have lost money, I have gained experience. So that money really went for a tuition fee. A man has to have experience and he has to pay for it. But there was something that hurt a whole lot in that experience of mine in Dan Williamson's office, and that was a loss of a great opportunity. The money a man loses is nothing. He can make it up. But opportunities such as I had then do not come. So the next 4 years were very lean years, and that's something we'll get into in coming up presentations. But basically, as a trader, you have to make money while the sun shines. And he had fantastic conditions, both on the long side and on the short side, but he was handicapped by being a patsy for Mr. Williams. I learned that the weaknesses to which a speculator is prone are almost numberless. Amen. And you're going to find some of those over time. So here's something that I was working on. I was sitting on my desk, and I thought that this would kind of dovetail nicely into a bit of this presentation. And he said that he wasn't really feeling that great, and he was having a hard time. And you really need to take care of yourself, like I said earlier. A diet, I'm not so good with that, although I've made some improvements there. I do exercise, as I said, every day. And then rest, and of course, relaxation. My wife calls me hobby boy. I'm always into something. But I think it's very important mentally to do these things, and you really need to be at your best. And then you need to pick the best. Now, the problem is there are a lot of extraneous influences, things that have nothing to do with trading, whether you have money, whether you need money. Lately, we've been in a bit of a drawdown as far as setups are concerned. There just really hasn't been a whole lot out there. Portfolio is doing okay, not fantastic, but okay. You saw the setups that were long and one short just a few minutes ago, but we're not printing money right now. And of course, life goes on. You need money for things. So I'm under pressure to try to pull money out of the market, even though the time right now is not a good time. So you have to learn how to see what is from a attached standpoint, and then ignore those extraneous influences. And then, of course, all the other things I talk about where you have to accept that you are discounting the future, and you might be wrong, and you're greater fool hunting, as we often talk about, where you need a greater fool to come along to take the trade away from you, somebody who paid more for it than you did. And guess what? Sometimes you are that greater fool for him. And of course, whenever you're discounting the future, making a prediction, a lot of stuff can happen between now and then. And that's a quote from Greg Morris. All predictions about the future, and a lot of stuff can happen between now and then. So again, you have to plan the trade the plan, obviously live with your decisions. And here's the hard part. You have to separate skill from luck. If it was luck and you recognize that, you need to be better in the future and pick better stocks, even if the stock did well. And then, of course, you really need to document everything you're doing. And also, way back here, every morning when you wake up, I strongly recommend you do your morning pages. Now, negative outcome, obviously, stuff happens, okay? It as long as you pick the best going in and plan the trade the plan, then you need to pat yourself back on the back for doing the right thing. It's the process that's going to get you there longer term. Anyway, I could obviously flesh this out in a lot more detail. It's just something I just want to show you, mainly the going into the trade back here, that you're going to have extraneous influences. You have to see things sort of from a detached viewpoint, and you have to be dispassionate about the setup and make sure that nothing is influencing you, and of course make sure you're feeling your best going in. Now let's get back to Livermore just for a second here. There were some good lessons to pick up this week, and most of this came from chapter 13. None of us are immune from human nature. So we need to recognize, again, not to beat the dead horse, but we need to recognize those external influences. Do not play the game if your hands are tied. Make sure you have the freedom to do what you want, when you want, if you are going to trade. I met a young gentleman recently. He's going to try to work with a prop firm, and they've put a lot of stipulations on him that could actually cause a lot of bad behaviors. But I'm hoping that he does well, and we'll see how that works out. You need to make sure that you are of sound body and mind, and be cognizant. Again, there's that extraneous influences again. You really need to be cognizant of extraneous influences. And then you have to make hay while the sun shines, as Livermore would soon learn after a brief period of time where conditions were fantastic, where he was printing money. The next 4 years were very lean. Well, that's it for this week. Again, if you need the slides in this presentation, all the other presentations combined, go to davidlandry.com/StockCharts. I'll give you all 3 of my books in PDF format too. You can reach me at davidlandry.com/contact. And again, join me every Thursday night, unless it's like a holiday week. But most Thursday nights, davidlandry.com/webinar, and Twitter, or X, I should say, @TFollowingMoron. Thanks for watching, and may the trend be with you.